Hey everyone, so today's video per day is going to continue in the series of entity structures. And so today I'm going to talk about S-Corps because it is talked about so much and there's so much miscommunication. So I'm going to cover three topics and the third one is going to surprise you. So the first thing I want to talk about when it comes to an S-Corp is something that you need to understand if you decide to go the S-Corp route. So this is going to be obviously a high level quick video, so I cannot do a full training, but something you need to know when it comes to S-Corps. First of all, I'm a Tia Brown, the savvy accountant. Well, when it comes to S-Corps, you need to understand that you have to take what's called a reasonable compensation. And so reasonable compensation is basically the salary that you take from your S-Corp. And so there's a difference between your salary and your distribution. So the way salary works, it's going to work the same way as if you got hired in any job. Basically, it's going to be you, the person that's going to be the member owning this S-Corp. You are going to be taking a reasonable compensation. So you're going to be paid a salary on a W-2. So the same way that you would have payroll taxes coming out of your regular job, that's what's going to happen with this. So you're going to end up getting a W-2 from this S-Corp at the end of the year, well, in January, for the following year. That's how the salary piece works. Distributions now work on a different scale. Distributions is you taking money from the entity, the company, but it's not payroll. So it's not going to be a deduction for the business. Distributions come out of equity of the business, and without going into the whole training on what equity is versus payroll, it's not going to be a deduction. So you know how you have your profit and loss statement, you have your revenues less your expenses, and salary is one of those expenses. Distributions is not an expense. So distribution is basically you taking equity out of the business. And the thing with the salary versus distributions, salary is going to have taxes. Your distribution is tax-free up until a certain point. Without getting into giving you a training on basis and what that is, basically you can take out distributions up until a certain point and it's tax-free. If you go beyond that limit, which involves basis and going below what you have in basis in your S-Corp, then you're going to pay capital gains tax, and that goes into something else, but that's another tax. Remember yesterday I told you there's more than income tax. So understanding the difference between salary and distributions, salary is going to be it's going to be an expense for the business. It's going to come out. It's going to be a deduction, and you're going to have payroll taxes coming out of it. You're going to get your W-2 that's going to show you what your gross salary, all of your taxes that were paid. Distributions, on the other hand, can be tax-free with an S-Corp. And it's you taking money out of the business, but it's you taking it out of the equity. So it's not giving you a deduction. So it's not going to reduce the taxable income that's from that S-Corp. And when you are an S-Corp, we did talk yesterday about self-employment tax. You don't have self-employment tax. So you aren't going to be paying self-employment tax. And that's mainly because when you are paying yourself a salary, you are paying the Social Security, Medicare taxes because you're paying yourself a regular salary like you would when you hire someone, or like you would have gotten paid if you were being hired from another company. So your Social Security, Medicare, all of that's going to be coming out of your paycheck. And so that's the main reason that you don't have self-employment tax when you're an S-Corp. The second thing I want to talk about is what is reasonable compensation. So reasonable compensation, essentially, the government's not going to give you a number and tell you this is what you should be paying yourself, but think of it as what would I reasonably be paying someone to do this job if I had to hire outside help? So for example, if I had a business, if I had my CPA firm and it was an S-Corp, what would I be paying another CPA who's going to be running the business the way that I do? So if my CPA firm is making $2 million, it's probably not feasible to say that I would be reasonably paying another CPA $40,000. So reasonable compensation is going to depend on a lot of factors, the industry, what the business is, how much work you're putting into the business, stuff on that nature. But you have to make sure that it's reasonable, or else the government can basically assess and say that you didn't pay yourself a reasonable compensation, and your distributions that you've taken after you've taken your reasonable compensation can actually be reassessed. And so you don't want to get yourself in trouble. So reasonable compensation has to be taken if you are an S-Corp, and then you can pay yourself above and beyond that amount in reasonable compensation as distributions. So the first thing is understanding salary versus distributions. The second thing is what is reasonable compensation and how do you determine that number? And the third thing, when should you become an S-Corp? And the reason that I said the third thing that I talk about is going to be a surprise is because most people on these social media streets are going to give you a number. I'm always going to tell you, you need to do a tax analysis. You need to figure out what your number is and where it benefits you to change your entity structure should you decide to change it. And so it's not going to be, you're never going to get a number from me saying, oh, you should make $30,000, and once you make $30,000 you should be an S-Corp. I'm always going to give you the standard it depends, because it really does depend. As my old coach used to say, it be depending. And so you want to make sure that you aren't just going by a blanket number and you're doing an analysis on your exact situation to figure out if you should be an S-Corp, if you should be another entity structure, if you should keep things the way they are. But it's never going to be just based on a haphazard number, because when it comes to taxes, there are different things that go in and out of it, and you want to make sure that you're doing what's best for your tax situation and you're not just following someone else because they became an S-Corp, because in their situation it might have made sense. So I hope you guys learned something about S-Corps a little bit on this video per day challenge where I was discussing in the series of entity structures. So I will see you tomorrow, and we are going to be discussing how your different entity structures impact self-employment tax. So I'll see you tomorrow. Bye.